Okay, hello traders, and welcome to this live intraday strategy webinar. Today is Thursday, February 16th. Just got the release of housing starts in the United States and building permits, both coming in slightly higher than expectations. As you can see here, initial jobless claims also coming in just a little bit better than expectations, 239,000. Not expected to be a major market mover, guys, but could offer a little bit of a pause on the index, which is coming into a near-term support target. Still broadly looking lower in the index near term, but you are coming in some support. So we could open up the market in the U.S. with a little bounce. We'll take a look at that in a moment. Pound dollar, euro pound, and Kiwi dollar, Kiwi yen, all four setups from last night. We do want to take another look at today. Kiwi CAD will just touch base on that rebound that we talked about earlier in the week. Finally materialized, caught resistance, and turned just ahead yesterday. So we'll take a look at Kiwi CAD. Dollar CAD's on the list. Dollar yen is on the list. And Aussie dollar is on the list. On the back of yesterday's interesting mix of employment numbers out of Australia, I put it on the SB Squawk, guys. It was really interesting because you did see the headline numbers initially cause a nice rally. Unemployment downticked. The addition of jobs for January did top expectations, but they were all by way of part-time. You saw the labor force participation contract. So I would say at best it was a mixed, if not neutral print. We'll take a look at that in a moment and what the reaction in the Aussie has been. Okay. Let me know if there are any other quick pairs, trade setups, or questions you guys have. Nat Gas will be on the list. Don't really have much to add from yesterday on there, Conwall, but we'll take a look. Conwall, Kazaa, great to see you in the room. Sarab, Pete, Saful, Graham, Carlos is here. Doug's in the house. Pete, Mohammed, great to see you all today. All right, let's jump right in. So here's what the dollar index looks like. Dollar CAD, Graham is on the list. Gotcha. More than welcome, Mohammed. Great to see you. So what I want to go over, DXY. So here's what we were looking at with the DXY earlier in the week. This is the update from Valentine's Day a couple of days ago. Daily chart had us coming into that structural resistance level. There it is. We never actually got the close above. And this was the first level that we were talking about. I remember the day of, it was Tuesday morning as we were leveling through. That was really the level to beat on a closed basis. Critical resistance is where we capped out back in November. Nice range here. Longer dated 618 retracement from the 2001 decline. And this is a 141.4 extension of the breakout. Long story short, we rallied even intraday, just missed a tag at the lower end of that range, reversed and closed on a reversal day back below that. Near-term structure was also violated, so we'll show you that in a moment. But the focus remains lower. Right now, what we just did is we're testing the weekly opening range lows. So objectively, you could see some support there. Add to that you got this positive data bounce here. That's not the strongest read, but could see a little bit of a bounce. The housing starts month on month did contract, but that's a real loose figure, and markets won't really move too much on that. Interestingly enough, and before we get into any other trade setups, guys, today, what I want to just note is in the market environment that we're in right now, nimble, nimble, nimble is the name of the game. I was just talking this over with Jamie. Don't fall in love with the dollar on either direction right now, and kind of try to ignore the fundies. There's a reason to ignore the fundies, and one of those reasons is just because if we take a look, guys, at what markets or how expectations have changed just in the last couple of days. Obviously, we're done and we've gotten the Humphrey Hawkins testimony, semi-annual testimony from the Fed out of the way. Sounded a little bit more hawkish. Looking at what the Fed fund futures are looking at right now, or pricing in, still the May read is about what is that, a 48% chance, 47% chance. There is an expectation discrepancy. Bloomberg is pricing in now a 60% chance for May. Now remember, May is not a quarterly projections, is not the forecast, quarterly release. So very, very slim expectation already. But I think Bloomberg calculates this a little bit different. Keep your eyes on this. I've sent you this link a couple of times, but there it is again. in case you want to track Fed Fund futures on your own. You'll find it in the chat box there. You just take one, basically subtract 100, that from 100, and that'll give you the probability that we'll see a hike. So act like you don't know what's going on with the fundies. The point I'm trying to say is there's different things saying, different things basically on what the expectations are moving forward. Long story short, trade the levels, not the fundies, okay? And the fact that we failed to close above that region leaves the obvious risk for a downside move. Here's what the 4-hour chart looked like. This was the key resistance range we were talking about yesterday when we were breaking through on the webinar. We were actually trading above it. And I was like, look for that rally and stretch into 102 would have been a sweet spot, I think, to try to initiate a short. We didn't quite make it that high. In fact, right after the webinar ended, this thing just collapsed, came right back below 101.50. And here we are basically testing this region right here, which is the weekly opening range lows, which converge basically on that 50 line. Here's the intraday chart looks like. Okay, here's the 60-minute. This is the 120. Let me get 60 and just be on the same page there. And you could see how this played out. Okay, so we basically made a run through that, failed, came right back. There's that break back below 100, the break back below the median line. Here's the lower parallel, and the weekly, here's your weekly open, the weekly opening range low. So you could see a little bit of a bounce here. Wouldn't be too surprised. Look for initial resistance at the weekly open, but the larger story, I'd be much more interested in looking for a stretch into 150, ideally 120, 100 spot 20 to be exact, right here. Would be a 618 retracement of the advance and structural objective support. And that converges right down there. So initially you're at support. Look at the US Open. I think, again, you might get a little bit of a bounce here. Bearish near term, basically above those Monday, Tuesday highs, 101.12. I kind of leave that there. Looking for a stretch inevitably into 150 and 100 spot 20 for entries on the long side. Look, basically heading into the end of the month, the broader story here, and if you look at seasonalities and a lot of analysis that Jamie's been doing as well, our expectations is that you might just travel sideways to higher here into the close of the month. So don't get too frustrated if the dollar kind of loses some direction here on the index over the next couple of days. We've had a really nice run. The basing support that we made early in the month, late last month, was well documented. At this point, on this kind of stretch, give this thing a little bit of a rest. Don't fall in love with it too much. The levels have been clear on the intraday, but as it pertains to the crosses, you want to trade, want to take each pair on its own merits. Any questions on the dollar index? Testing opening range low, structural support here. Again, look to sell rallies well below 101, 101.12 near term. That is number one. Number two is sterling. Right on, Pooja. Good timing. Here's what the British pound looks like. So we highlighted this last night, and a little bit of a different take. If you go to the previous update, we were working with a median line formation off the highs. We kind of broke through early in the week and corrected lower. I didn't like where that low materialized. So if we took another kind of stance at this and just use this basic slope, parallels off these two reference points have offered some really nice turns. Take it right here. Support, support, a little messy, but that tag right there was the larger structural support that we made. Okay, right there. If we extended off that quick low, you have resistance, 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 pivot break, resistance, pivot acceleration. Again, that same slope off the highs, really nice resistance, really nice resistance. And that's what we ran into last night. So, I'm kind of torn here on the British pound. I do want to see it. Let me take a step back. We started off the week by saying we want to see a new low for this thing to have corrected and completed a simple correction off the highs for us to get back on the bullish side. Remember, the broader picture for the pound really remained constructive and really remains constructive. Here's the daily chart looks like. What concerns me now is the breadth of the magnitude of the bounce that we've gotten off this slope for a secondary time here. I don't know if I want to necessarily try to fight that. We're at resistance right now, so if we are moving lower, I kind of want to see those Asia highs hold right here. Bearish invalidation is still steady at 25.68, okay, into 25.78, which is basically the monthly open. If we pop through there, look for a resumption straight up. But in the meantime, I still do think this thing could risk a little bit of a move lower. So as far as the daily chart's concerned, these are the slope lines I'm working with. The invalidation level is pretty clear, 618 confluence on the monthly open. Really, if you break below 123.60, these are the downside targets that are just have me salivating for a long position in the British pound. So we'll see if we can get that drop. What will prompt that, I'm not sure. I think you need to let the dollar give us a little bit more of a basing before you get too aggressive on the upside. But certainly, it looks like these parallels have continued to hold pretty well. Okay, so good morning, Mike. Sterling dollar, please holding shorts from 125. All right, so you're right. Where's your stop, Pooch? Is it against that high, that Asia high? Or are you a little bit further out, 25.30? I like it. I like it. I like it from a level standpoint. Let's look at the let's look at what near-term price is saying. 30. Okay, and just get British pound there. Okay, you're not getting much on the momentum here on either direction, to be quite honest with you, but I do love the level of which you got that you went against. If we're going to hold, like I said, this is kind of where you want to see it. If we plow through the highs, it's a good thing to have that stop where it is, because I do think you can rally all the way up into that key 25.70, 25.60 level. It's pretty big. But yeah, I mean, just on basis of slope, I'm with you. 3 tags of resistance, 4 tags of support, really nice. And that's why you'll see, if you zoom this out a little bit more, try to make everything make sense on the charts. That's why I see this one's in solid, and these are all dotted. This is the origin, the slope. These are the parallels. So do you see this? This is the broader slope that we're looking at in the daily chart. This pitchfork, that's what has me concerned. It's been really nice pivot. So if this is just a consolidation break and ends up popping higher, certainly is not the favored move. The favored move is that this consolidation breaks lower. You move into 1226, 1221, juicy spot. That'd be a nice equal 100 off the high, resumption of the broader uptrend. Yeah, 125.30. Okay, cool. All right, Pooja, does that make sense? Does that help? Guys, let me know if there are any other questions here on pound. We've had quite a week of data. And if I'm not mistaken, we're pretty spent for the rest of the week. Nope, I'm lying. Tomorrow, you got retail sales tomorrow morning for the UK. All right. Moving right along, that was number 2. Euro pound, interestingly enough, with the rebound that we've seen here in the pound off of structural support. We'll look at euro in a moment. That also saw a really nice rebound off structural support. Obviously put euro pound in a very precarious situation where it's really holding a very tight range. What I did want to highlight last night was the simplicity of the setup, in that it simply has set a very nice weekly opening range just above key support, which is kind of like a giveaway play. You wait for this range break, and when it does happen, it should charge some volatility. And here's what it looks like. Well, first, let me just go over the daily chart real quick. We presented this setup early in the week. We were coming right into this key support. We did see a nice bounce off that. The rebound has now given us, like I said, a really nice weekly opening range. Okay, right into that 618, which was near-term support, also a very nice pivot in price, is now the weekly opening range high. So you're looking at 84.50 into 85.30, okay, 80 pip range that you're looking for a break. Our favored break would be a downside move, but we have to play this objectively. The opening ranges for specifically for euro pound actually typically play out very well, pretty nicely. So if this does break to the upside, I will let this thing rally towards 85.80. You have structural resistance up there and the monthly open. And that's my near-term bearish invalidation level. I'll look for short triggers up there, but if that gives out, I'm not interested in this trade at that point. Ultimately, we're looking for a downside break of this key level into this level. You're still not out of the woods to break 84. And that would be a little bit more of a key break for downside targets beyond. So whether this is charged by euro losses or by the sterling finally making that new low and then starting to rally, our broader bias remains weighted to the downside from here. What we're trying to gauge at this point is, you did make some divergence on this low. Is the magnitude of this rebound going to be a little bit higher back to structural resistance, monthly open, or is this just a rebound off of key support before the break? I would still leave room, like I said, for a pop into the monthly open, but this is where I'd be looking to get back on the short side. All right, so not a big fan of the trade just because typically the ATR is not really that big and you're working with pound pips, so obviously hurts a little bit more when you eat a stop. But the levels I think are pretty clear. Look for a break of that weekly opening range. Questions on euro pound? That's number 3. Okay. Kiwi dollar. Another one we've been following very closely. I pretty much was as clear as I could be. I was basically looking for resistance right where we were as I was writing this report, and basically you were looking at this line. Now, let me bring it up. Where's Kiwi dollar? There we go. This line right here that you see, guys, first of all, in the daily chart, I kind of want to stress that first, is the median line extending off the lows. Okay, that's the initial reason you'd start to look for some resistance at that level. Also, just look basic lateral support and resistance. Look to the left. You have the highs from here, and you have the opening range low for the month, all stacked up at 72.40. So, yeah, it's worth a look, definitely, to look against this resistance. Structural resistance, former swing lows, former swing highs, it's a no-brainer, right? But you need to wait for price action to really validate that on the near term. And indeed, it was. Here's what the hourly looked like. You had some divergence into that high, okay? Couldn't really highlight that in the report last night because that candle hadn't closed, but you could see it starting to take shape here as this price action was butting up against the 70 level on RSI. Price has obviously moved higher. And this, by the way, this level right here is just a measured move of this. So basically I took a pitchfork off the highs, extended a parallel off of that low that we made back on the 3rd of the month. A measured distance from here to here gave us perfect resistance right up here. Okay, and it ended up being like a 0.7 measurement or something that put it right on that level. We've been following it ever since. Acted pretty nice here, acted pretty nice here. The exact parallel or the exact mirror image of that caught nice resistance. Again, so the polarity here in price has been very clean in Kiwi dollar. Long story short, you're basically looking for a run back into the monthly open at this point. We're going to go ahead and drop bearish invalidation down to 72.50. In my humble opinion, as long as you stay below that parallel, we're still going to favor the short side, looking for 71.80. The median line, ultimately the weekly opening range lows, come in at 71.35. Let me just snap the levels for you here. If you need to take a snapshot of that chart, feel free to do so. Questions on Kiwi dollar. Pretty clean. Still like it. Still like it. Okay. Don't rule out another run towards 72.54. So if you're playing this on the defensive side, which you should be at this point, you don't want to have your stop anywhere beyond the overnight high that we had in Kiwi, which is basically the highs right here. If your entry is somewhere near here, I wouldn't object too much from keeping the stop against that region, but it really depends how you're looking to play this. Nimble, 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 nimble. Don't fall in love with any one trade. This is our trade environment, guys. Okay, so you don't want to be sitting in a trade for too long. I was an example, although our swing trades are still long Aussie, or they were last night, I thought it was a good fade opportunity. I actually jumped into a short off the high. Now, took a little bit off, and then it got stopped at break even, but again, nimble, 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 right? And we'll go over that in a moment. Any questions here on Kiwi? That's number 4. Number 5, even better than Kiwi, was Kiwi Yen last night. So again, that held as resistance. There's a turnaround, dropped bearish invalidation down to 72.54 here on Kiwi. Downside targets remain unchanged. For Kiwi Yen, beautiful trade. Last night, we're right at resistance. The reaction was kind of unbelievable for me, and I even kind of expressed that. Too clean for comfort. I still think it was, but nonetheless, it was right there for us to take, and it was basically an 82.60 bounce. We turned just pips ahead of it. Now, 82.60 represents the 618 retracement of decline, so right off the bat, it's a nice fib level. You had structural resistance up there, upper median line parallel, and the monthly open. Okay, momentum, mark-in divergence, all up in that high. Nice turnover, and you're basically looking for this pullback at this point. Here's what Kiwi Yen looks like this morning. All right, so the turn really materialized and accelerated to the downside, took out the median line, took out the yearly open, and we're looking for that last and final stretch into that target at 81.85. I don't want to say that, I'm not going to, let me take a step back. I don't want to say I'm going to get long here per se, but I think you might see an interruption in near-term pullback, maybe another rally towards the 82 handle or 82.20, and then a look for the break lower. But ultimately, it's a really nice area for this thing to turn if it is going to, in fact, turn. Okay, a topside break, you're looking for a stretch all the way basically into 83.13 at this point. So the invalidation level is pretty darn clear. We were trading at that level yesterday. The pullback now eyeing some near-term support just under the 82 handle. 81.85 would complete a basic 38.2 and would be those Friday highs from last week. Really clean levels here on Kiwi Yen of all things, right? Questions on Kiwi Yen? All right, let's just touch real quick on Kiwi CAD since we're on the Kiwi. This was a setup that we highlighted the previous day as well. Here's what Kiwi CAD was looking like earlier. So I know we've gone over this over the last couple of days, but I just really wanted to stress that that median line at the lower parallel did, inevitably hold. The bounce that we got, we talked about yesterday in the webinar, was right underway. It went through, let me just snap these levels for you, most of the topside targets. The only thing was we failed just ahead of that 94.64. Excuse me, that would have been completed a basic 38.2 retracement. And it would have been really nice for a median line touch, but whatever, can't get them all. So it turned just ahead of that. Here's the breakdown. Look, I don't want to get too excited about the short side yet, but I do think you want to be looking broadly to sell rallies again. I would constitute this as a failure of the break of the weekly opening range highs. So going along with the Kiwi theme of weakness, I do like selling rallies in this pair. The only thing with Kiwi CAD is curb your expectations on the downside. You're likely just to continue to follow this slope, which means the losses are going to be a slow dribble. And I say that because CAD is doing its own kind of thing right now, and it might limit the downside as far as Kiwi's CAD is concerned on the near term. So just keep that in mind here, carving out a weekly opening range, which has held, but still working under the assumption that you want to be looking lower. All right, so nothing really new to add on Kiwi CAD, but just a picture of where we are now. Again, 94.33, still looking lower below that region. Okay, since we touched on the CAD, let's jump on dollar CAD. Here's dollar CAD. 6, this will be number 7. Who had a question on this? Graham. Here's what dollar CAD looks like. So I'm so done and frustrated with this thing near term that you know, I just don't have anything to do with it. I just don't have anything to do with it. If you remember, everything looked really cheery earlier in the week. You know, we came into 130.30, which was our bullish invalidation level. What a reaction off that region. Beautiful. We came into a near-term structural resistance. You know, perfect. Okay, great. We held this channel, looked like a bull flag. Look for the top side break, and you're done. And you're off to the races, right? Well, fake out here yesterday failed at the weekly opening range high. A pull to the downside invalidated that median line formation that we added yesterday in the webinar. So now at this point, you know, this is going to be trash for me. And what does that mean? You know, I don't want to fight this anymore. I don't want to fight this anymore, especially with the bout of near-term dollar weakness that we're seeing. And the daily chart, again, you know, dribbling below that trendline support that we've been following since the start of the month, basically. No closes below. If that changes today, you know, I just don't have a trade set up here. I have a bias. Yeah, if we close below it, I'd be looking lower towards the lower parallel. But would there be a way to effectively trade that from here? I don't think so. Without chasing this thing, I don't think so. So take that for what it's worth, Graham. It's been a trickster, and again, you know, calling 130.30 our bullish invalidation level was the right play. But what do you do with this? Does that constitute a break? Well, you got to close below there. Dollar reversal. Well, dollar index is coming off that near-term support at the weekly low, so maybe we shouldn't fall too much in love, and maybe you do get the rebound in the dollar, and dollar CAD moves higher. If you put a gun to my head, that's what I would like to see happen. But the levels are what you want to use, Graham. Stick with levels. That's what I'm going to say. I would say that the same levels targeted back earlier in the week remain unchanged. 130.30 is still going to be my near-term bullish invalidation. So while we did dip below that, you know, if we make it back above, let's say the overnight Asia highs, all the levels are going to be pretty much dead on still. And the objective weekly opening range high, which caught support yesterday, or resistance yesterday, is right here. Guys, excuse me 1 sec. I just want to see what this looks like. It's just going to be messy. Just hold on 1 sec. All right. I could live with that. Let's do this. Here's near-term resistance at the weekly open that converges on that upper parallel near term. That's basically 130.80. And look where the lower parallel converges, right on that level we were looking at anyway. So if you do see a downside break, 129.60, 129.61 is going to be a 764 retracement just below the lows you made earlier this month. That's off the advance from the low that you made back in 2016 in August. All right, so Graham, hope that helps. Just a quicker, closer look at this. I mean, you know what where our bias has been. Yeah, I do like it higher. I just didn't want to see this thing probe back below 130.30 again. You know, the same setup that we were talking about since the start of the week, buy bounces above 130.30. That's a little scary because we got pretty close to the 130 handle there. So same deal. Near-term support, key resistance. Okay? Yeah, you're more than welcome. Nimble. Okay? Quick in, quick out. Any other questions on dollar yen? Or excuse me, on dollar CAD. Dollar yen's next. All right, going once, going twice. Dollar yen. So the pullback, breaking near-term support or basic near-term channel support. Here's what dollar yen looks like on the daily chart. And here's what dollar yen looked like earlier in the week. So don't think we necessarily need to go too much over the daily chart. From the daily chart perspective, the only thing that you really wanted to highlight was where this thing peaked out yesterday. And it was precisely at that 50 line. You see that? Boom. Now, that 50 line didn't give us way too crazy support on the way up here, but it did play an integral role back here on the initial advance. Resistance. Once we broke, acceleration. Here it is again as resistance. So we were talking about the probability for a pullback. Again, yesterday, our near-term bullish invalidation was 113.54, so that was the support. You kind of came right through that. Here's what it looks like, or here's what it looked like on Valentine's Day, again, near term. And here's what it looks like now. So you did inevitably take out that topside target at 114.85. You missed 115.10 by a good 15 pips, 13 pips before this thing turned over. So where does that take us from here, Mike? Nice walkthrough. Let's do some quick look at a quick look, excuse me, at near-term price. Okay. Do you think you can get a deeper setback here in dollar yen? Basically, as long as you stay, sub 114.15 near term, I do think you're at risk. Now, the only thing I was looking for is I was hoping this would mark some divergence and you'd get an opportunity to get along. You didn't get any divergence, so I didn't get a chance to sort of jump into anything here yet. But I think you're too far gone on the long side. Look for a rally towards here, I think, to get back on the short. And if you tack on a quick retracement point, in fact, right off the highs, you'll see that the 50% retracement comes in just above that 114.22. So a nice region of resistance. If we get a rally into that, I'd be looking for possible exposure back on the short side. Ultimately, we're not looking to get too aggressive on the broader move lower, but I do think this warrants just a little bit more of a pullback from here, especially after coming off of this long-standing median line we've been tracking since last year. Okay, it wouldn't be outside the realm of possibility, guys. Or let me take a step back. It would actually be super clean from a technical standpoint if we break Trend line resistance, come back, check it as support. I mean, we did that last week, but at this point on the daily chart, that level would converge right on the monthly open, which is right around that 618 retracement. So key butter zone, don't know if we get all the way down there, but near term bearish invalidation now that we've broken support is 114.22, 114.15. Questions on dollar yen? All right, let's touch on Aussie. Aussie. So here's what the data look like for Aussie dollar. Okay, so 13.5 thousand. Well, that looks pretty good, right? People are clapping their hands. What upward revision to the previous month to 16.3 thousand? Even better. You move at the full-time employment upward revision to the previous month, also better. Part-time employment upward revision to the month, also better. But unemployment dropping to 5.7 looks great, right? Everything on the facade looks awesome. Deeper look at the metrics. All of the new jobs that came, okay, basically all 13,000 net were by way of part-time employment. Full-time employment actually contracted by 44.8 thousand. Participation rate, broader labor force participation rate, also dropped to 64.6 thousand from percent, from 64.7%. Might not seem like a big deal, but this is what largely contributes to the downtick that you see in the unemployment rate. And the labor pool becomes smaller, it tends to put artificial downward pressure on the unemployment rate. So what does that mean? This is mixed to, a flat read if at that, at its best read, in my humble opinion. Now, what does that mean for price? Well, it just means that you don't want to get too aggressive on the initial move. And that's why for me, sort of as a near-term trader, a move against that rally last night on the data was the way I played it, to the short side. And that's just based on the initial reaction that you got to data that I don't think was all that positive. Now, it doesn't change the broader picture. I do still think you can get that stretch into key resistance. Remember, on the swing side, we're still looking for a stretch near 77.80. Just ahead of that, guys, from a near-term standpoint, I do have 77, let me zoom this out, 77.56 as a region. An 88.6 might not seem like a big retracement. This is just a square root of 786, by the way, another derivative of the fib ratio. But it's also the high that you made back here in August. It's also former median line support for the Aussie dollar, which was key all throughout last year. Okay, this median line parallel, there it is. And that all converges right around 77.56. So might offer a little bit of a ceiling near term for a kickback. But broadly speaking, nothing's really changed here on the Aussie. The only thing I wanted to highlight yesterday with those tweets is that you didn't want to get too aggressive and say, oh my God, the data came out so strong, I want to jump into the Aussie long, because that's the exact way you didn't want to play it. In fact, the initial reaction to the upside was a perfect opportunity to fade this lower. But that trade is done with. You're coming to a U.S. session. Asia has reacted. You're finding some support. Remember, the weekly open and downside target, 76.78. That was my secondary limit. I never got it, so I'm not actually in that short anymore. But that would be your initial downside target, followed by basic slope support. And again, these parallels, guys, are all based off the parallels off these lows. Right here, perfect touch, perfect touch. Extend off these highs, perfect touch, perfect touch. That was also resistance last night. There's a 120-minute for you if you need to take a snapshot of this. Questions on Aussie dollar. Okay, let's jump to some of the commodity questions here. Nat gas, not really anything new from yesterday. I just want to continue to highlight these parallels. As far as horizontal levels are concerned, I'm not really a big fan of getting too aggressive on any of them. Excuse me, slope has really been guiding this kind of the best way. So I'll be looking for support near like 285 today, 284.5, let's call it, this region. As far as lateral levels are concerned, there's really nothing I'm looking at till like 282. And you stay bearish below the weekly open still. You're probably not going to need that in a couple of minutes, so I'll get rid of that for you too. There you go. These levels I'd be looking at. Conwall, just keep in mind that for the last 3 days, you've been straddling the 618 retracement. Okay, so if you want to get like really granular with it, it's a pretty clear-cut definitive range near term since the 13th. So until you break that range, you're just straddling that 618. Oops, sorry guys. There you go. Weekly opening range high, weekly opening range low, ping pong, straddling that 618. Look for a break of that to give you the next definitive move. While within this slope, you're basically still looking lower. All right. Conwall, feel free to take a snapshot of that. Whoops. Sorry about that. I hit the back button, so I just lost that. But you get the picture. Conwall, did you get it? Let me know if you need that again. Silver looks like this. So silver is still tempting a break of that resistance. Where's the chart? Or actually, for me, that's, pretty much as definitive as it goes on the daily chart. The only thing I'd be looking at is the intraday chart here. It's continued to hold pretty well within the confines of this ascending median line formation. Still highlights key resistance at 1835 into 1834 is the bottom of that range. This key region here. 50% retracement, 100% extension. The August lows all stacked up with the upper median line parallel. Okay. At this point, you're going to raise bullish invalidation from the monthly open, which was support all last week. You're going to bring that up to the weekly opening range low, which now converges on that 38.2, and that brings up into 1772. That's now near-term bullish inval. I mean, you're still marking divergence into this thing, and the break didn't give us a run. So Conwall, I don't want to, if you're asking me, I'm not interested in trading this at all. I want to know the key levels. Wake me up if we're up at 1838, 1835, or wake me up if we go back into the monthly open or below. Anything in between, there's a whole lot of chop. Whole lot of chop. Okay, but the key levels to play off of, I think, are pretty clear. Still marking divergence on every subsequent high we've made this week. Let's see what the 2 hour says, or even the hourly. Hourly is clear. Not the most convincing, but doesn't inspire any interest for me either. And as far as copper is concerned, here's what copper is concerned. The best trade I think that I'm paying attention to is actually gold, just because we're coming back into that key resistance level. If we take a look at copper, it's still reacting to that sliding parallel that we added back on Monday. See that? It did end up being something very important to watch for, and the failure to close above it has offered some real nice downside moves. Now, we haven't closed below the monthly open just yet, those dotted lines. So I do think you're basically sitting at near-term support or near there. Here's what the intraday chart looks like. We'll have to get that break below 271 to get this thing going. Now, gold looks a little cleaner in that it's back near-term resistance, in my humble opinion. I didn't think that we were going to see quite this rebound, guys. If you remember, we were looking at this 1217, 1218 as the break point to really validate the next move lower and a new low in gold that we could look to get long of. Remember, these were 2 points of interest, of which if we got the drop, we said would sort of be like a gift to try to get back on the long side. At this point, obviously, yesterday spoke for itself. You came back, tested that region of support, and look at the reaction. You actually closed higher on the day. So I do think the upswing here, you look for resistance right back at the same level we were looking at, which was the high day close at this point. And that's right around 1241, 1240 heading into the close of the week here. So a little bit higher in gold, but looking for near-term resistance into that region. Is the correction done with this? I don't know. In fact, I don't even want to work with this slope anymore. One other thing I just wanted to highlight is that if this is a break of the objective weekly opening range, came back tested as support, it's also the weekly open. That would be a near-term long bias heading into a Thursday, Friday high. So be weary of this thing spiking into one of these topside targets into the close of the week before giving out and giving a little bit more of a decline to get long. Okay. All right. Any other questions before we wrap things up? I do apologize, guys. Last couple of days, again, I've been under the weather, so if my voice has been a little lackluster, that's why. Again, we will keep you updated on SB Squawk. There's really not much major event risk on tap for the remainder of the week. Look at the economic docket tomorrow. Yeah, you're pretty clean. So we'll be looking for that broader price action to really dictate things. Look, keep your eyes on price. The fundies are going to come in. You're getting a lot of political noise, which is also filtering into the markets, specifically talks about this tax and border adjustment and whatnot. These are going to be headlines that will filter into market psyche moving forward. Keep your eye on the levels, okay? And like I said earlier, don't fall in love with any one trade. Nimble is the name of the game, especially if you're near-term trading with me. Bring those stops to break even. Don't be afraid. I don't, I'll eat a break even stop anytime. I'll always have the opportunity to look at a new position and reassess the situation. But it's not the market where you really want to try to press anything because everything seems to, give you the false break, throw over, pull back. You get a lot of false breaks, a lot of false starts. Any support levels to look for longs on Sterling Key, says Pooja. So for Sterling Key, remember this formation we were looking at a couple weeks back? The slope was pretty decent. And in fact, if we take another one, let me take a look at this, Pooja. Well, I tell the 50% retracement comes in right in line with the monthly open. So that in and of itself is something of interest. Yeah, I'm going to go ahead and ditch this. Yeah, I would be looking for the monthly open first. But thanks for bringing this up. Actually, I haven't been tracking this pair. It looks very interesting. Last time we talked about this was here. We were talking about the crazy amounts of divergence we were getting, really nice rally. I think we might have run another report as we were testing this, which offered a really nice bounce. Now, got a really interesting pullback here. I still want to highlight this key region. You got the 100-day moving average, the 50% retracement. It still will necessitate a break back above that median line, which has been pretty decent off the lows here. Highs caught the close. Every time I pull up a retracement or extension, the same level comes up, Pooja, and it's not what you're going to want to hear. It's all the way down here, 71.30. It's like another 200 pips. I mean, it's sterling key, so the ATR is there. We could squeeze that out in a day, no problem. But I think if it's a simple correction off the high, two equal legs down would take us sort of near this region. It's also a 618 retracement. Oh, I'm sorry, that's the 1618. The 100, yeah, we've already invalidated the 100. And just for argument's sake, bear with me one more second. Okay. Yeah, I mean, for a swing type of position, again, that would be the sweet spot for me. As far as trying to clear the upside, if you get through the weekly open, which we're testing as resistance right now, you have a pretty clear-cut high to get through. I wouldn't even get too excited about that 50%. It's really just the weekly opening range high, which matches last week's high. Largely, I do like this higher. Near term, I think you might chop sideways, to be quite honest, Pooja, because I think sterling could pull off a little bit and Kiwi could pull off a little bit. It might keep this thing range bound, largely speaking, on broader trend terms. I think a base in pound you want to buy, and Kiwi might head much, much lower. So, yeah, I do like a larger term breakout here to the upside in pound key. Keep in mind one thing, very clean monthly opening range. Boom, that's your high. Boom, that's your low. You made it in the first 7 days of the month, and we've been trading in that range ever since. So a clearing of these highs, like I said, would really open up these top side objectives in sterling key. No stops from here, though. Yeah, I wouldn't say I have anything confident to say as a stop from here, no. I mean, you can look at the monthly low day close as a first initial key area as a stop. But for me, it's the yearly low day close. But 69.50 is way far from where we are right here. So I would need a better entry, Pooja, or a break of resistance, zoom retest to support to get back on a conviction trade here of sterling key. But I think you're on the right track. Okay, we'll wait and watch, says Pooja. You got it. All right, guys. So if there are no other questions, I'm going to go ahead and wrap up the room here. I will see you all on Tuesday here on SB Trade Desk. Again, Monday is going to be President's Day here in the United States. Banks will be closed, guys. So I don't foresee that there will be much action to get into. In fact, if you are trading Asia or Europe, liquidity conditions might be a little thin, so don't get too wrapped up in anything near term till we get full market participation returning back on Tuesday night. All right. Best of luck trading, guys. We'll see you next week. Cheers.